My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multi-millionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So as always, we're going to dive right into the charts, take a look at what the probabilities are. What are the trade setups today that I'm focusing in on? Let's get right into the charts. So bringing up the ES futures chart today. So yesterday, again, we saw a neutral to slight positive day. This was yesterday's price action on the S&P. Very choppy. We had some early upside with some big drops, kind of ups and downs. Ultimately, the markets closed up on the S&P about 0.25%. Overnight, it's been a gentle float. You can see you've had a little upside, a little downside, a little up. And now you're starting to come in a little bit more. So for the most part, I look at this and I say, okay, listen, there's really not a lot of price action. The market's uncertain about the direction it wants to go. Number one, we got Marvell earnings yesterday after the bell. The stock dropped initially, then rallied back to the upside. So again, that's a chip stock, so it does influence the markets. Although it's not an NVIDIA, AMD, or Broadcom, it still has a little bit of an impact. And again, it is higher, so the neutral to upside bias on the market remains for now. But I don't trust it, folks. I'm telling you right now, these charts are telling me that we are in trouble in terms of potentially another sizable drop. Let's take a look. All right, so flipping over to the S&P 500 here, we can take a look at the daily chart. The daily chart now has had two kind of choppy sideways days, right? We had a down day on Monday, an up day on Tuesday. That was following 5 up days in a row that took us during that Thanksgiving holiday week, right? So lighter volume, institutions on the sidelines. Since then, again, it's really just been sideways action here to start this week. Now, part of the issue here is we have hit a gap fill. Gap fill right here. As of now, this has capped the market's upside. Now, if the S&P were to close above gap fill at 68.50, I do think there's potentially further upside with a max upside of taking us back to this level here. And maybe that's the end of year Santa Claus type rally if it were to come in. But the first step is, do we get through 68.50 on the S&P? That is your line in the sand, all right? So keep that on your radar on a closing basis. Now, if we start to head down, you'll have a little bit of a stop right here at gap fill. But if that breaks, we could really energize towards the downside and see a much bigger drop. And just to flip over to the weekly S&P chart, here it is. Here's that gap fill trend line. I had it on the daily chart. But you can see, again, why I've been harping on this. While so many people have been bullish on the markets relentlessly over the last month, I've been a little bit more cautious talking about potential downside because I can't, as a technician, someone who looks at probabilities, I can't shake the fact that this parallel has been in play, literally marking every major low, every major high in the market for the last 5 years. Now, until that's taken out, I remain cautious purely based on probability, right? Probability is something we have to follow. Listen, there's always a narrative out there. I mean, narratives were going nuts in terms of the AI trade earlier in the year. All right. Now, all of a sudden, people are like, oh, maybe they're overvalued. Maybe the shadiness is going on. Now the narrative's flipping back towards bullish again, right? And so this is just a dime a dozen type thing versus the charts give us something concrete to look at and say, okay, this is the level I have to monitor. How much upside is there left? In other words, if I'm going to go long the stock market right now, right, how much upside do I have till I run into a brick wall where there's a real test? And the answer is about 2%. So there's 2% potential upside before you slam into resistance. Now, it's not to say resistance can't get broken. Remember, resistance can get broken, but we must respect it until proven otherwise, especially when you look back and you say, wow, imagine if I went long here, 2% from this high at the highs of the bull market, and then what ended up happening, right? Look at the repercussions of people that ended up going long right at the highs or close to the highs. And so again, it's a very much formulated logical stance on the market that really allows us to ignore the influencers, the hype, the emotion and focus on the data. The data is everything here in the markets. All right, flipping over to the QQQ. This is a really interesting chart, guys. So again, we had this beautiful parallel where the markets could not break this upper orange ascending trend line of the parallel. Then we had the support levels here going back here to the lows in September, to the lows in October, to the low in November, and then we broke. Look at the high yesterday, right back to that level. That's what we call in the business the scene of the crime. All right. So again, the scene of the crime retrace. In other words, this line was support, 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 broke. Now it's technically resistance. To me, that's another issue that the markets have to fight against. Listen, and again, just like I said before, there's no guarantees it pulls back over here, but it's the odds. The probability is you see some sort of kind of rejection of this technical level on the QQQ. Now, one of the things I'm watching here is the Japanese 10-year. I brought this up nonstop since I basically brought it to your attention about 2 to 3 weeks ago, how this was a rallying 10-year yield. And again, a lot of people don't understand why the Japanese 10-year is so important. It comes in the form of the carry trade, where for the longest time, big institutions borrowed money from Japan, basically paying zero interest rates or even negative interest rates, meaning they were getting paid to borrow money from Japan. And then they would basically put it in the US markets and make 3%, whatever it would be, right? And so the idea is as the Japanese 10-year goes up, that trade unwinds. And there's talk that this is literally a $20 trillion unwind of liquidity. So while the Fed is set to cut rates, and everyone's like, oh, this is going to increase liquidity, you have the fighting force, the opposite, going on with the yen carry unwind. And again, this is all stemming from debt and all of these other factors that we know. Japan has a ton of debt to GDP. The US has even more debt, but it's less debt to GDP because the US is so much bigger. But the point is, the unwind is occurring, and that can actually tighten monetary money, essentially money in the system. It can take money out of the system. All right, so keep that on your radar. Now, the US 10-year today is pulling back just a little bit. More and more bets for a Fed rate cut. Basically, I think it might be as early as next week, I believe, in terms of this. So again, we're coming up on the Fed decision coming up in basically just a week's time or so. And the odds continue to strongly favor a rate cut. So even though we had a big pop in yields on the 10-year just the last few days, we're now pulling back a little bit. I fully expect us to essentially just trade within this zone, right, between these two levels. Once we get the Fed decision, are they going to be, they're going to cut, right? So they're going to cut. That's not the question. The question remains is, are they going to dovishly cut or hawkishly cut? Are they going to cut and say, we're going to do more? Or are they going to cut and say we're on the sidelines? The problem is that even if they're hawkish, the time is ticking on Jerome Powell's tenure as the Fed chair. We know in May there's going to be a new Fed chair, which will likely be very, very dovish. And so you wonder if at some point that's going to drive the 10-year and break it down to the downside. Obviously, the debt markets could have something to say about that on the long end of the yield curve. All right, let's go on, guys. I have some major stock alerts here. So yesterday we talked about Apple. Apple has now achieved my upside target of this parallel. That has me shorting Apple. So yes, I did short Apple yesterday. I even picked up some long-dated puts on Apple off of this level. So again, I'm a creature of discipline and a creature of logic. And what that does is it makes me patiently wait until a level like this gets triggered, right? So you have the March COVID lows, the bear market low of 2022, the liberation tariff collapse here in April 2025, the bull market high here in 2021, the December high of 2024 before the big drop here. And lo and behold, look at what we've pierced right up here. And so for me, as a technician, this says, okay, this is now time to begin a short position. Now, do I go all in on my short position day one? The answer is no, because I've learned the hard way, which means AKA I've lost money in the past doing this, is that ultimately you can think that a level is in stone and it could still pierce that level because of momentum and greed. Just like fear is such a pervasive emotion that you could have an amazing support line, and in the near term, it could still pierce, even if it's still going to bounce and get back above that level and get a bigger bounce. And so what I like to do as a trader, and this is something I pass you guys on because it's so important to success, is I start small. So I began basically what I would consider a quarter position size short Apple right up here as of yesterday. And again, basically I'll have a mental thought process that probably every $5 to $7 higher, I would add another quarter position. And the idea is we're at 185, 186 on Apple. It could go to 200. I mean, that's an even number. We're at 285, 285. It could go to 300, right? And so the idea is, again, as a trader, you always prepare for the unknown, because the unknown is where people get in trouble. That's where people go all in, and then something happens and they're like, oh my gosh, I'm all in. I literally can't do anything. I don't have any money to dollar cost average, and therefore I have to just pray. And once you turn to praying for the markets to do something, you're at the mercy of the markets. And the markets are almost like an entity that it's like a shark with blood in the water. They will go after you. They will put you through the most intense pain of an investor can feel, because they just smell it. They smell that investors have gotten all in on a trade. It's one of the reasons why I use the contrarian mindset so much in investing, is because when everyone is bullish on something, I'm like, wait a minute, maybe I should be a little bit more cautious here, and vice versa. When everyone's panicking, maybe I should be a little bit more bullish, right? And so good example of this was crypto, right? So crypto had that nasty down move on Monday. I was actually buying altcoins, Near Protocol, Polkadot, Sui, all of these. And look at the bounces we've seen. The bearish sentiment had gotten too big. Plus, we never took out the lows. I almost saw a positive divergence there. We'll go over the crypto charts in just a minute. But nonetheless, let's go back to this chart. So Apple, for me, I have now shorted Apple up here, right up in this range. I'm going to look for a pullback. My general target is going to be the former high here of the bull market run in 2024. Remember, former major highs become which are resistance. You can see right here, price came up, rejected, and then it broke out, right? And so the idea is this now becomes support around 260, a pullback to 260 on Apple. Walmart is now a short as well. All right, why? Well, number one, look at this beautiful parallel, right? We have this parallel here, high pivots all across. And what did it tag yesterday? The other thing, and listen, I'm not a big fundamental guy here. You guys know that I'm technically based, but it's hard to ignore when Walmart has a PE ratio of like 59 and Nvidia has a PE ratio of 25. Like, think about it. Wait, Walmart has a double the PE ratio of Nvidia. Is that even possible? How does that even happen? All right. And so this is where money has over bullishness has drawn more money into this. Basically everyone's over allocating. There will be an unwind process, and my starter position was at the high end of this. Same thing, not going all in, but starting to look for a pullback on this. Target would be the low end of the parallel. All right, now MRVL had earnings yesterday after the bell. It initially fell on earnings. Their earnings were good. They weren't that great, but then they announced that they bought an AI company and the stock ripped up. I don't think this holds, guys. I would not be surprised if this goes negative today on MRVL. So just a heads up, I am not short MRVL. I want to be clear. I don't have a good enough signal for that. But just the mere fact that it was down and then they announced this buy of this AI company and it ripped up, I'm a little suspect on this here, folks. So just be aware that, again, while this is holding up the AI stocks today, the chip stocks, I'm not a buyer in terms of that. And in fact, wow, we're starting to see, holy cow, I'm just looking at the markets here, guys. The markets have dumped out here. Let's go back. Look at this, guys. Wow. All right, so just flipping back. I usually don't go back to the futures, but I just glanced at one of my other screens and I saw the market dumping out here. Huge drop on the markets here. Wow. Speaking of which, that's going to be good for our Apple short that I took yesterday. You can see all my dots. It's actually not down that much, but nonetheless, that is an incredible flush on the S&P futures. We were trading just before the game plan at 68.62. We just went to 68.18. Wow, 50-point drop on the S&P futures here, folks. And again, markets are coming down. I have some positions here in my portfolio that I picked up. Pretty remarkable here. And again, I apologize. I'm getting caught off guard on this. Heck, what the heck? You guys can, I'll flip over to this here. Let's go back to me and you guys can see this here. I'll show my screen. I'll show my account here, but I'm going to actually take some profits on this. This was a trade that I picked up this morning. Bear with me as I bring this up. All right, so let me see here, folks. You guys can see my account. Let me go to full screen on this. That's stinky on the full screen. It's showing the full thing, but that's okay. Let's just go back here. Let me bear with me as I do this, folks. This is very rare, again, that I'm going to do this here, where I'm going to actually show, and I should be exiting the position instead of messing around here, but it's okay. It is what it is. All right, here we go. All right, there we go. There we got the account up there. Bear with me. There we go. All right, so I'm going to take my profits on VXX and I just exit here. Let's just get the heck out of this and we'll go here. There we go. All right, come on, fill me. 45,000 filled. I had 50,000 long VXX going into today. All right, here we go. I'm going to keep my SOX trade here. I have 750,000 shares of SOX. And by the way, this is more just a quick trade here. Again, we'll see where it goes, but I've only 556. I'll just get out of that so I can get back to the game plan. We'll just exit. Boom. All right, we're all out. So I made about 24,500 there. Solid there. But yeah, wow. All right, that's nice. That's nice. All right, cool. All right, guys. So let me get back to this, guys. Let's get back to the charts. I apologize. Kind of crazy there as, again, markets have just dumped out sizably here. But I'm going to hold on to the SOX at least for a little time during the day here. But let's get back to the chart analysis. And again, as of now, I'm not aware of what's going on. All I know is the markets have had a big drop here in just into the open here. So again, volatility creeping up, and we'll go from there. All right, so couple other stocks on the radar here. Macy's basically talking about a poor, this morning they fell on earnings, and the company essentially saying that the holiday outlook is not the greatest. That stock is falling. American Eagle Outfitters looks like it's niche. That's actually up, as again, people are still loving American Eagle Outfitters. We know Abercrombie and Fitch. I almost feel like this is back when I was a younger child here, a young kid, right? Is Abercrombie and Fitch reported earnings a few days ago. You know, not to get distracted off the technicals here, but you know how like fashion, like something that was fashionable like 20 years ago, then comes back into be fashionable. And now, like when I was a kid, when I was like in high school and you know, and around there, the late 90s, etc., like American Eagle Outfitters, A&F, Abercrombie and Fitch, it was all the rage, right? And now it's all the rage all of a sudden again. Just a little stupid little anecdote there. But in any case, guys, CrowdStrike reported earnings yesterday after the bell. The stock's barely down. Let's go to Bitcoin here. I got to get going here because we're getting close. Plus, with this volatility, the live day trading room is going to be hopping this morning with this sell-off here. All right, so what do we have here? We have Bitcoin, big bounce yesterday. Love that bounce. Listen, I still think it's going down here, folks. But like I said, you had more bearish sentiment on this drop on Monday, and it didn't take out the lows. That's a positive divergence, right? So think about this. Priced higher lows, but bearish sentiment. If we do a line of bearish sentiment, it was bearish here and even more bearish on this day, right? Right here. And so for me anyways, I said, all right, well, listen, that's a good potential for a bounce. And we bounced. I did take some off the table on my longs, but I'm still in Cardano. I'm still in Polkadot. And I did take near for an over 10% gain in basically 24 hours, which was nice. But let's talk about this. How high could Bitcoin bounce if it continues? I gave this level the other day. Very simple. My max upside would be about 100,000. And then I still think ultimately we're going down to 73, 70,000, somewhere in this vicinity right down here. All right. Let's take a look at gold and silver here. Gold is up fractionally. Remember, we closed above the wedge pattern. Okay. And we then confirmed, barely confirmed, but we did confirm. We retraced. So this now becomes major technical support right down here, right? All right, so major technical support there. And then essentially you eventually, listen, unless we break this zone here, this wedge to the downside now, this is now you have to favor the upside to double top, right? And then double top's going to be impressive. I mean, that's going to be a big level on the chart of gold. Silver, guys. Silver was up yesterday. It's down slightly today. It has not hit my max move of $60 and change here. If it does surge up, that's going to be a big level of resistance. Oil, folks, let's take a look at oil. Oil is up slightly today, still struggling right at this upper trend line here of resistance. You still have your cup and handle, so the pattern is still bullish. But again, you want to see a breakout sooner than later on the oil trade. And then lastly, natural gas here. Nat gas, again, if we bring this up, we can see again, it's pushing up. So nice move on nat gas. You basically have this little top right here. Okay, now if we break through this, basically if we get about above, let's say $4.90, I think your next move takes you to 530, which I will look to short. 530 to me, again, still stands out as a major resistance level. Flipping back to the ES futures chart, again, big drop here going into the open. Markets did get a bounce, but they're coming back in a little bit. By the way, folks, the way I trade, if we get a pullback on VXX, let's say back to 31.75 or less, I'll probably start accumulating that again. The VIX is way too low for the risks right now. Way too low. Way too low. All right. It is ridiculous how low it is. People are so complacent. Again, we saw this bounce in the market over Thanksgiving. I told you guys, listen, institutions are going to take off. So don't be surprised at a bounce, but the retail investors getting lulled right back to sleep as institutions just want to unload and unload and unload. All right. So again, be aware of this. The VIX, again, to me, down in this range, I play the VXX. That shows you what I play for the VIX. Again, it's a short-term trading vehicle, but looks really good there. All right, guys, I got to get going. I have some questions here, and I apologize. I apologize to those of you who asked them. I'll keep them. I have a log of all the questions. We'll get through them. I just, again, didn't expect this drop on the markets where I had to unload that position. Thank you guys so much for being members. I will talk to you soon, or being followers of Verified Investing. I'll talk to you soon. Take care.